Hello, my fellow Canadians. My name is Dylan Milks. On Monday, September 18th, 2017, I attended a fantastic 2-hour seminar put on by my accounting firm, MNP, also known as Myers Norris Penny. The subject of the seminar was to go over in detail the Liberal government's proposed tax changes on Canadian small businesses. So the purpose of this video here is to provide a verbal summary of some of the key points that small business owners and entrepreneurs need to be aware about for these upcoming changes that are happening, probably starting sometime this fall. So I want to start off by being clear on one thing. These changes are only affecting private corporations, small businesses that are incorporated. So for example, if a small business is a sole proprietorship, then these changes have no impact on those businesses at all. So there's really three areas that you need to be aware of for these changes. The first is business income that's being paid out to non-arm's length shareholders and income splitting. The second area that you need to be aware of is investment income or capital gains made by the corporation. So for example, excess profits of the corporation using that to invest, and whatever returns you're getting from that, those are having major changes in how those are being taxed. And then the third area is capital gains from the sale of businesses, in particular when the sale of the business is to a non-arm's length shareholder or a family member. So first off, I want to define the term non-arm's length shareholder. So this would refer to anybody who is related by blood, adoption, marriage, common law. Anybody who fits that bill who's a shareholder would be considered a non-arm's length shareholder. So you're going to hear this term a lot during my presentation here and my summary. So for example, if your spouse is a shareholder of the company, they would be considered a non-arm's length shareholder. If you have a child who is in an adult child who's in university, they're a shareholder, they would be considered a non-arm's length shareholder. I also have to just advise you all in advance that I am reading from a script to make sure that I can capture all the key points and not miss out on anything that I wanted to communicate to everybody. So the first area here we're going to cover here has to do with business income being paid out to non-arm's length shareholders and income splitting. So one of the major themes or words that Justin Trudeau uses is fairness. And I should say that in quotes, fairness, because really it's not just a sham. It's just a word that he just uses as a sham. It's nothing fair about what he's doing. So in a nutshell, he believes that small business owners and entrepreneurs should be taxed at the same rate as employees. As well, any salary or dividend payment to a non-arm's length shareholder must be in proportion to what they've contributed to the business, and also be in proportion to what an arm's length employee or shareholder would have made for the same work. The updated CRA language uses the word reasonableness. So CRA has this term that they're going to be used to determine if something is reasonable or not. They're calling it reasonable. It's a reasonableness test. So here's a couple examples. If your spouse works for the business part-time, and let's say is receiving a higher salary than what a arm's length employee would be making for the same equivalent work, then that will be flagged by CRA. There's a real potential for that being flagged by CRA. And as a punishment, what would happen is that all that income would be taxed at the highest marginal tax rate. Example number 2, if your adult child is attending university full-time, they are a shareholder of the company. And let's say the child works 5-6 hours a week while they're going to school full-time. Several times per year, you're paying the child a dividend payment to cover their expenses they're incurring for school or this or that. Because the child is not employed full-time by the company and has not made contributions to the company that are proportionate to the dividend amount that they're receiving, they will be taxed at the highest marginal tax rate. So again, because the government is using this term or this test of a reasonableness test. So in the government's view, it's not reasonable to be showing preferential treatment in either salary or dividend to a non-arm's length shareholder or employee. In their mind, that is not reasonable and will be punished, severely punished, if you're caught doing that. So here's a couple of little examples here. A couple more points I want to touch on. All tax incentives that small businesses have had for the last 30 to 40 years are being removed under the guise of fairness. CRA has not and will not define the threshold for what will be flagged. So for example, if a non-arm's length employee is making, let's say 20% more in salary than what an arm's length employee would be making for the same job, it's the government's discretion where they could deem that to be unreasonable and unfair, and then tax that person at the highest marginal tax rate as a punishment for what's happening here with the business. Now, a couple other points here. All non-arm's length shareholders who are employed by the company must have an official and detailed job description written up for them. So this is how a business owner could prevent themselves from falling into the above mentioned scenario. Is you're going to have a detailed job description for any employee of the company who is non-arm's length. So that way you can refer back to it should you be flagged by CRA. Now, obviously, this is going to be an increase in paperwork and administration costs to the business, as well as increase in accounting costs for tax preparation, as well as consultation with your accountant. And CRA has not, and most likely will not, define the term reasonable, thus making enforcement open to the subjective opinion of CRA. In other words, they can pick and choose who they're going to enforce these rules on. Well, maybe they're enforcing it on some groups of people and not others, because again, it's subjective, it's not objective. So the next thing I want to talk about is investment income or capital gains made by the corporation. So this is a major change that's happening. So for one, the capital gains exemption is going away for small businesses. So any income made by capital gain, investment income, is going to be taxed basically differently now. The capital gains exemption is no longer going to be applicable. So in other words, capital gains will be taxed at a new higher rate. When a small business owner attempts to forward the profits of this gain to themselves personally by way of dividend, obviously it is double taxed. Now, of course, it's double taxed today, but the fact that the capital gains exemption is being removed from the business, so you'll be paying more tax at that level, as well, you'll be subject to a higher dividend tax rate in the above example that I just gave. The end result is that the total effective tax rate will be higher than what an employee would have paid on the same investment income. So if an employee had an investment account and let's say they had $20,000 in it, they had $20,000 of profit, and a small business corporation had $20,000 of profits. By the time you funnel that money back to the shareholder, the tax rate that they're going to pay in that scenario is going to be higher than if that money was made by an employee. So a couple of real life examples. Capital gains on investment income will be double taxed and thus subjected to a higher tax rate. So, as I just said earlier, passive investment income will be subjected to a 73% tax rate. 73% tax rate on passive investment income. So that could include from rental properties or from interest on loans or, bond, interest from a bond, so on and so forth. Any type of passive investment will be taxed at 73%. Many retirement savings plans for the business owners will have to be completely redesigned because, again, for the last 30 years or 40 years, when the tax code looked a certain way and had favorable tax laws towards entrepreneurs and business owners, all of these are being removed, which means that anybody who's had a business for many years is going to have seriously reconsider their retirement planning strategy if their business was part of that strategy. So there are legitimate reasons why a business would want to invest for the future. So one of them would be diversification of risk. So let's say, for example, a business is in one sector of the economy and they want to invest some funds in another sector of the economy, because obviously things fluctuate. And that's a legitimate situation where a business would want to invest. Business wants to invest for savings opportunities to expand a business, to renovate, to purchase new equipment. They want to have product development, R&D. They want to self-insure against lost earnings. So, for example, during a recession, they want to have a pool of profits that they've made from other forms of investments that they want to put aside to help them get through slow periods or recession. Savings for unforeseen contingencies, building up of savings and for retirement. In other words, managing the realities of being an entrepreneur. All these things are going to be taxed much, much more heavily by Justin Trudeau and his Liberal government. So the Liberal government's point of view on this is that their concern is that corporations have an unfair advantage. And the reason being because they have a larger pool of capital to invest, thus resulting in a much larger potential to earn investment income. So in other words, instead of making it easier on the average employee to invest, they're instead tearing down the corporations, the small business corporations, and making it more difficult for them to invest by introducing these new heavy taxes on small businesses and their investment income. So they believe then that because of this, small businesses should be taxed at a much, much higher rate. The third thing I want to talk about is capital gains on the sale of a business to a non-arm's length shareholder. So they believe that there should be no difference whether income is earned directly through a corporation and then paid out as a dividend or earned as an employee. So I touched on this earlier. The effective tax rate on business income is set to increase to 50%. That was what my takeaway was from the presentation. Proposals make it infinitely more difficult to transition a business to a family member. So many small businesses, the business owner wants to pass off the business to their children. So these changes here that the Liberal government is proposing will make it actually, you'll be taxed at a much, much higher rate, upwards of 71%, should you pass on the business to your children or to any other non-arm's length shareholder. So in other words, 71% of the value of the business will be paid out in taxes, which basically only leaving you with 29% left. And so what this is going to do is going to discourage businesses from being sold off passed on to their non-arm's length shareholders, and instead it's going to encourage businesses to be sold to private individuals who are not related, or again, arm's length corporations. So the idea of a family business is going to be much, much more difficult to pass a business down from one generation to the next because of the Liberal government. So a few final takeaways here. The government is making no distinction between a business owner or entrepreneur and an employee. Nothing. In their mind, they're the same and should be taxed the same. Virtually all the tax incentives that the governments of past for the last 30 and 40 years have had in place to incentivize business creation and expansion are all being eliminated. This is what's happening. This law will have little to no impact on large businesses, the big banks, the oil companies, the investment companies, the insurance companies, so on and so forth. The reason being is that these large companies, their millions and millions of shareholders are not family members. They're not. They're all just the general public who own stocks in terms of the retirement plan or their RSPs. So really, there's no impact to them, to these large companies from these laws. They're only targeting small businesses in Canada. So this law will be voted on without anyone having read the exact legislation, as the final wording of the legislation is still not available as of the time of this recording, which is approximately a week and a half prior to the feedback deadline. And the feedback deadline is October 2nd, 2017. So my suspicion is that no draft legislation will be made available for feedback prior to the vote in the House of Commons, or at best shortly there before. So this, for those of you who follow American politics, this reminds me a lot of what happened in 2009 when the House of Representatives and the Senate voted on the Obamacare bill. Now, for those of you who follow this, you may remember the famous speech by Democratic House Majority Leader Nancy Pelosi, where she said her famous line, "We need to pass the bill so we can find out what's in it." I'll say that again. We need to pass the bill so that we can find out what's in it. Folks, this is the same situation where there'll be no finality of the bill or of the legislation will be made available to the average Canadian prior to the vote. And even if it is, it'll be past the time of consultation. In other words, even if you don't like it, there's nothing you can do about it. You can't even call your MP because it'll be too late at that point in time. So I would urge all Canadians need to get out there and contact their MP and write a letter of complaint or phone your MP and complain about this, because when small businesses are going to experience a 50 to 100% increase in their tax bills, I'm telling you folks, this is going to be so devastating to small businesses. Because try to think about if any employee, whether you're an employee or not, if your tax bill went up by 50%, what type of impact would that have on your life, on your quality of life, on your ability to save for the future, your ability to save for your retirement, your ability to save for your children's education? All of those things are going to be radically hurt by having this bill. In fact, I would go as far as to say that many small businesses are going to have to maybe lay off some staff or maybe even reduce hours of some employees because of the excessive tax burden that is being placed on them. Now, one important stat to note is that 70% of jobs in this country are created by small businesses. So this tax changes will have very wide sweeping negative implications on a wide range of Canadians. In fact, the majority of Canadians will be negatively affected by this bill. So folks, I'm going to urge you all to click on the links below in the description of this video. And what you'll do is you'll find links to how to find out who your MP is in your area. You'll find a link to a letter template that all you need to do is just fill out a few things, and then you can send that in to your MP. And again, I would urge you all to phone your MP but before the end of the week and to voice your concern about this legislation, because again, this is an absolute killer of small businesses in Canada and will have tremendously negative impacts. So thank you everybody for watching, and please take action immediately, and we'll see you again. And I hope to God that this doesn't go through, but I'm very skeptical, because from what I've heard, it sounds like, no MP is going to get to read the bill prior to them voting on it. So again, take action now, voice your opinion, and let's not stand for this. And again, this is not a liberal or conservative issue. This is an issue of what is good for this country, what is good for small businesses, and what is good for the 70% of Canadians who work for small business. So take care, and we'll see you again.
But we have to pass the bill so that you can find out what is in it away from the fog of the controversy.